Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, July 5th at about 12:30 p.m. Eastern. Well, U.S. job growth slowed to a still healthy pace in June, with the unemployment rate rising to 4.1%, increasing the chances that the Federal Reserve will be able to tame inflation without tipping the economy into a recession. That's a good thing. Non-farm payrolls increased by 206,000 jobs last month, the Labor Department's Bureau of Labor Statistics said in its closely watched employment report this morning. Data for May was revised sharply down to show 218,000 jobs added instead of the previously reported 272,000. And on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at its highs, all-time highs, at $553.58. So far, the official all-time closing high was Wednesday of this past week on July 3rd at $551.46. So we'll have to see what happens today if the SPY closes above that high, that all-time closing high at $551.46. Now, as we know, the SPY is still trading above its red line, the 20-day moving average, the green line, the 50-day moving average, and the black line, the 200-day moving average. And if we go back to January of this past year, was what the market opened on January the 2nd, so it's right around here. It opened at $472.16. So far, from that open down there, and it's pretty much walked up its 20-day moving average, except for a cranky spot here in April. Of course, everything has to rest a little bit. Then came right back up, walked up its 20 days. So from the beginning of the year to today, so far, the SPY has gained 17%. That's a terrific gain. We also know that for most of this uptrend, except for the April dip, price has pretty much used the 20-day moving average as its trend line, except for that dip. And that brings us back to the present. So present day here, we're looking at this price up here at 553.58. So we can say that 553, 554 will be our new, can act as our new line of resistance, depending on where it closes here. The 20-day moving average is coming in as pretty significant support here, again at $543.90. Call it $544 if you want. We have, for more potential support here, we have the May highs right here. We have more potential support here coming in at 533. Then we have the 50-day moving average coming in at $529.82. And then, of course, we have down here to the April lows down here at 500 and the low at 493. So a lot of potential price support should the SPY need it. We can note here again that the 14-day RSI here is coming in here at about 71, right over this overbought 70 line. So we'll see how long it can stay there, but we just need to have that information. The SPY has bounced a bit this week. That's a good thing. Basically moved sideways for the week before that, and that's all positive. I'm remaining a bit cautious here. Next week, we have the CPI, Consumer Price Index, and the PPI, the Producer Price Index, coming out. Those are important reports showing the costs of goods and services, which, of course, will be of great interest to the Federal Reserve. So this is all positive. It all looks good. But again, I'm going to be patient and see what happens during the beginning of next week. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100 index the top non-financial stocks in the NASDAQ stock market, and also home to momentum stocks like NVIDIA, Meta, Apple, Microsoft, that whole group. And they've been quite a team this year. When I captured this chart, the QQQ was trading at all-time highs at $495.63. Now, the most recent official all-time closing high took place on July 3rd at $490.04. That's the official all-time closing high because we haven't closed yet today. Now, of course, as you know, the Qs are trading above the 20-day moving average, coming in here at 478.55. The 50-day moving average coming in at 458.22. And the 200-day moving average down here at 417.90. Call that 418 if you want. The 14-day RSI here, down here, is back above the 70 line at 76, so we're back to being overbought again in the short term. Now, we know that the Qs opened the year here back in January. It's one of these candles here on January 2nd at $405.84. So year to date, we know that the Qs marched up the 20-day, gradually fell down in April, came back up, marched up the 20-day again. Nice strong move here. So we know that right up to this high up here at 495, the Qs have gained so far this year, since January, 21%. So that's a fantastic run. Nothing to be ashamed of. Certainly a terrific run. So let's establish some guidelines here. We're going to call resistance at 494, 495. Then potential price and moving average support both coming in here at about 477, 478. We've got May highs here coming in at 460. Let's see, May highs. Yeah, coming in here at 460. This whole area here. 50-day at 470. Coming in at 458 right here. So that same line. This whole area here is potential price support. Again, potential price support down here at 443, I believe this is. So lots of potential support if we need it. At the moment, of course, the Qs are still in the uptrend at all-time highs. That's a good thing. Please, next week, remember, trade what you see, not what you think will happen. Be cautious and be wise. Our third chart today is a daily chart of the Global X, and I should have put the word computing in here. Global X Computing Cloud ETF, the CLOU. It has 36 holdings. Top holdings include Wix, 3CAI, Box, Digital Realty Trust, and Zoom Video Communications. Now, when I captured this chart today, the CLOU, well, let's call it the cloud to make it easy, was trading at $19.93, just above. It's just above at the moment. It's 50-day moving average, definitely over its 20. The 20 is inversed here, and of course down below the 200-day moving average, coming in at $20.60. If you took this chart, if you made it into a monthly chart, you would see that the ETF was initiated in April of 2019 at about $15. Then it rose in a really kind of a straight uptrend up to an all-time high in November of 2021 at $32.37. And then it came all the way down, back down to, dove hard, down to a low of 14 in November of 2022. So that was quite a complete cycle there in a 3-year period. From there, it gradually healed and started climbing higher. And now we'll flip back to this daily chart and look at it here. We can see recent highs up here in February of $23.67. Price was kind of all over the map here at this high. Then it gapped back down. Then came back down here to lows here in February. And that retested lows from back in January at about 21-ish or so, then came back up, hit the 20-day and 50-day and couldn't keep going. So If you called this a head and shoulders, it would be a very strange one. But anyway, this price action, you can see price during March could not get over the 50-day moving average. It tried and tried, couldn't do it, then started coming down harder in April. Of course, everybody had April lows. So it came down here in April and kept continuing its downtrend till it came down here in June to a low of $18.80. And if you look at that long-term chart again, you'll see that 18 is kind of a support area in a longer-term chart, just throwing that in. So in the coming week, but I like how this is looking here so far. We'll see. I will see if this can become a good bottom fishing candidate. In the coming week, if the market can remain fairly positive and the CLOU stays above its 20-day moving average, which again is coming in here at $19.42. If it can stay above the 20-day moving average, in the coming week I will add a small position of the CLOU to my trading portfolio with a stop down here at $18.94. So it's going to be my stop, and you'll see why. See that drop down there? Okay. $18.94. I'm not going to give it all the way back down to the 1880 low. I could. You can if you want, but I think I'll get out a little sooner. So my stop will be at 1894. If and when the CLOU can rise above the 200-day moving average, coming in right now at $20.60, I will add to my position, and my stop, of course, by then will be a trailing stop. So you may want to keep an eye on the CLOU in the coming week. And now, news from ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. We talk about some of these before. If you look at the 3 winning setups program, that gives you 3 money-making setups for day trading, swing trading, and trend trades, one for each. You'll find out how to plan your trades, and you're going to know when to buy and when to sell. Now, our new discounted price for this program is only $59, and when you order, you will receive special bonuses, including 1 month of Metastock daily charts for free, or 1 month of Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading, how to swing trade successfully, trade the trend to profits, how to read charts, bottom fish like a pro. From all of these, you can find out how, again, these timeless online programs can help you earn more money quickly and easier. And once you purchase, you have unlimited access, so you can go at your own pace whenever you want. Be sure to check them out by going to the link on this screen up here, or simply click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.